What's up, guys? Hope we're all well. Welcome back to episode 11 of Sniper Sundays. This is a series where we go over all of my trades taken. I'll show you all my wins, all my losses, all my break-evens, show you the trade before I entered and how it played out after and the reasons why I entered that trade. While doing so, keeping a track record of every single trade that I've taken throughout the series so you guys can see how trading looks realistically when it's done properly. No bullshit, all the wins, all the losses, all the results. So this past 2 weeks, throughout the last episode since episode 11, I've not really traded that much. The markets have been very, very volatile, very wild. I have seen there's been a lot of good opportunities, but I've just not really focused a lot of effort in catching a lot of entries. Trading is very much about quality over quantity, and this episode should show you that. So in the past 2 weeks, I've only traded 3 times. And sometimes that is the best way to trade. I always get asked like, oh, how many times do you trade a day? How many trades will you take in a week and stuff like this? And that is just not the mindset for trading. Like, I don't hop on the charts thinking I'm going to have 10 trades today. Like, I'll look at the markets, I'll look at my analysis, I'll check how the market's behaving in line with my strategies. If it behaves in the way that I like, that meets all of my rules, then I'll trade. And if it doesn't, then I won't. But there's no like set criteria for you must trade this amount of time or you must trade a minimum or a maximum of this. It is really about quality over quantity. So in this past couple of weeks, with all the Donald Trump tariffs, all the trade wars around the world and stuff like that, the markets have been moving crazy. The dollar's been really falling hard. I have got some good trades in the past 2 weeks, but it's just not as many as usual because my strategy really relies, well, this one that I'm showing you anyway, really relies on trend continuation. And for doing that, you're basically looking for when there is a clear trend in the markets, which there has been in the past 2 weeks, but it also relies on suitable pullbacks to a certain level so that you can, for example, if the market is trending long, you'd want a pullback deep enough, like far enough back, as you can see on the screen here, that it comes back to a level that's satisfactory to buy low and then sell high. But with how aggressive the markets have been in the past 2 weeks, that's not always been the case. It's kind of fell short. And even here, you can see that I've bought this time from the 61.8, whereas I usually target these levels down here. So even in this past 2 weeks, I've been buying higher up than I usually would and having higher stops. So that is kind of why I've not really done too much in the past 2 weeks compared to normal. But anyway, without further ado, let's get into the trade. So the first trade we had was a long on pound US dollar. This one you can see on screen here. Here's how it looked before I entered. So we could see the market was pulling back with this ABC retracement. We could see that the EMA was acting as support, which previously was acting as resistance. We're on the 2 minute time frame here and we can see the price is making nice higher highs and higher lows. And then we've got this pullback into the EMA as support, into the 61.8 fib, which is a key fib level. And we had some candlestick rejections here in the form of these hammer candles. So we went long, we put our stops about 1.5 pips beneath the 71.8 when I'm entering off the 61.8. And what I targeted was the 5 minute candle body high that was up here. And that made me get a nice 2.4% trade. So this was on Wednesday. So I had no trades Monday, no trades Tuesday. And then I got one trade on Wednesday. I made 2.4%. Bang. Cashed that in for the week. And that was all I traded for that 1 week. So this was a couple of weeks ago now. But I made 2.4% that week just from this trade. And that was my only trade. That was it. So all these guys that are saying they trade 100 times a week, join my Signal group, I trade 5 times a day. They're lucky to even make more than that from just one trade. From their week when they're doing like fucking however many trades a week. Like they're just luring you in with what beginners believe is trading, and it's really not. But yeah, the whole thing about quality and quantity is you get into trading as a beginner for the freedom, and then you get hooked on the idea of trading. And then all you want to do is this fantasy where you're sat at the screen all day, trading all day non-stop because you've got that obsession now, and that's fine. But also, you got into this for the freedom, right? So surely you'd want the best amount of results while you're actually working the least, which satisfies what we're doing here with lower volume trading. So think about that side of it as well. Next trade, we had a Euro USD. I believe this was a short, but let me just check. Euro USD. It was a short on April the 7th at about 11:30. So let's clear that. Let's load up the Euro. Euro USD. 7th, 11:30. Let's go to that. Alt V. And this was on the 2-minute time frame again, which I'm on. Okay, so what we saw here, we had this bullish structure, higher highs and higher lows. Come London Open, the Asian high got swept, which was either this one or this one. Can't remember off the top of my head. Don't really want to change my time frame and fuck up the chart, but just know that that was the Asian high getting swept. Price broke beneath, changed character, and now we're looking at lower lows and lower highs as we continue the Asian session into New York. So then what we had is price making these lower lows and lower highs. This is still EMA resistance, okay? You see this purple line, that's your EMA, and you can see that every time price comes to that, it reverses, comes to that, reverses. We've got a couple instances of that now, and we've got this EMA, which is the point at which it's happening, and we've also got price making lower lows and lower highs. We want to target these lows down here because we've swept the Asian high, now we're going to seek the Asian low. So, come this point, we're seeing this is what's looking like a lower low. So we're looking to sell from this lower high, like this, when price is coming up. Okay, we recognized that this EMA resistance isn't perfect, so it's not bouncing off that purple line like we see sometimes, but it's still only managing to close a few times above that line before it comes back down. So we expected the same here. So we're not looking for it to bounce and sell directly on this line. We want it to pull a little bit deeper before it shoots off. So what we did is we took the fib from the previous high to the previous low, just like that. And again, we were looking for the 61.8 this time. Where we usually target these deeper pullbacks, we knew that with the sentiment in the market being aggressive in this past 2 weeks, we weren't going to get that, or at least even if we got an entry from the 61.8, we were saying that price isn't really going to break that 78.6. And if it does, then we're invalid. So we took a short from the 61.8, had our stops about a pip and a half above that, and then TP we targeted the lows. Now I've started targeting the candle body low rather than the actual low. So we'll look on the 5-minute here, and I'll show you my target. So it was actually this low here rather than the actual low, and I sacrificed a little bit of RR there, but I've noticed that sometimes if it will double bottom or just reverse early, sometimes it'll still take out that candle body and fill, especially if it's like an order block or something like that as well. So you do sacrifice a little bit of RR there, but it's worth it in the long run because you bank in profit on some trades that you would have just either gone break even on or even took a loss. So that was what the trade looked like. It's got it marked down as a 3R there, but when I took it, it was more like a 2.77. So I probably had this a little bit wider like that. Still 2.87. I'll tell you now, it was a 2.77 when we took it, like that. And this is exactly how it cashed in. So we had lower lows and lower highs, EMA resistance, fib levels being respected, Asian session got swept high and we're aiming lower, everything aligning. So this was a time where, okay, yeah, this was a trade, I took it and we made money, 2.77% we made. So it wasn't forced. I didn't hop in the market thinking I need to trade today, or I've got a quota of 5 trades a week that I need to make, and I need to trade as much as possible. This met all the rules, satisfied them, so we traded it and we took a win. So that was our second win this time around. And then third and final trade, we took a stop loss on Euro USD. Show you that one as well. This was a recent trade on Friday, I believe. The 11th, yeah, Friday at about 10:15. So let's load that up. Friday, 10:15. There we go. So this one, Asian low got swept, pushed higher. It looked like we were going to use that Asian high as support. So what was previous resistance to be used as support and push higher. That's an idea that we use quite a lot and we see a lot of success with it. We are making higher highs and higher lows. EMA is not really being used as support in the typical sense, but you can see every time price gets close to it, reverses, gets close, reverses, gets close, reverses. So you can see it still used that as a kind of support. It's just not as clear that it's like directly being used. But yeah, prices still failed to close beneath that EMA for a sustained period of time, so we can use it as confluence, high, 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 low logic, Asian session characteristics, and then we looked for the fib level from here to here. Got an entry off that 78.6. It was a very clean entry. We had the candlestick confirmation first in the form of that hammer, and then we entered from there. Stop loss just a couple ticks beneath TP up here. We had a decent entry, and then we just hit stop loss. And sometimes that's the way it goes. That's trading. It doesn't mean that you were wrong. It's just part of the probabilistic nature of trading. So that was a 3-hour trade that we lost, minus 1%. So all in all, for this 2-week period, we made, 5.1, like 4.1% in the past 2 weeks, which means that the running total for Sniper Sundays is now 24.25%. So we're on episode 12 now, and we've made 24%. Go back and watch all the previous videos if you want to learn more about my strategy. I do give away a little bit more information about this strategy earlier in the series, but we're 12 episodes in now, so you've got plenty of value there to go and study it further. If you want to get these real-time updates of when I'm placing the trades, drop me a message and you can join the VIP group. It's currently just £1 a day, or you can join for £50 a month on a subscription as well. And yeah, hop inside. We've got 3 live sessions a week, weekly Sniper Sundays videos, got a community chat with all of our members inside and all of our mentors as well. So it's a great place to network, ask questions about the strategy, learn as a trader, surround yourself with more traders, really get to know how the lifestyle works when you're trading full time. And you'll receive all of these trades beforehand with a heads up. We're looking for a trade. Okay, here's a trade, set your limits, stuff like that. We work on an RR basis and percentage, as you can see here. So we're not pip farming or misguiding you with, we've made this amount of pips and saying we're going to trade loads. You can see here I've only traded 3 times in the past 2 weeks, but I'm making money, and you can see that. But yeah, without rambling on and making this a really long video, I'll keep it short and sweet for you. Thanks for tuning in, and I'll see you guys on the live session on Monday.